a new person or anyone to say, oh, these guys are wishy-washy, they don't know exactly what's going on. Like, I mean, why should the market tell you exactly when it's done correcting and it's about to go into the next trend wave and wave a big green flag and say, buy me here? I mean, that's literally handing you the keys to the kingdom. Like, it just doesn't work that way. You know, you really have to work to figure out and use everything we're doing to figure out when the correction's over and when it's time to get aggressive and trend trade, right? So it's a never-ending quest to find the end of it and, you know, find the end of the correction, because literally that's the key. That's the path to riches.
And so, one point of that.
Yep.
Oh, sorry.
Go ahead.
I didn't know you were finished.
No,
so
go ahead.
You said corrections, and even if you are wrong on the corrections, you have mitigated your risk.
Good point.
So yeah,
Good point.
That's why corrections are the most important, because your risk becomes smaller and you know where you are wrong.
So define that. Go into that more, Alex. Like, give me more on that. That's a really good point.
Okay, so for example, here, if we have an ABC and we get WXY, I'm thinking NASDAQ, just you showed. So if we see
throw that chart back up there.
Which one do you want to look at, the NDX or the XLK?
NDX, because important. Or
yep. Okay, you're up.
Okay, so let's say we are long already NASDAQ. We are that via stocks, but let's say we have a point of X reversal and we go into more complex correction.
Mm-hmm.
So firstly, we already secured an entry and our stop loss, and if this reverses, our risk is already mitigated to allow our account management properly. So then if this happens, you of course rearrange, and that's why people doesn't understand Elliott, because you change the wave count. Of course, because the situation and pattern change, I have a next opportunity when the correction is done to put the same thing on with a mitigated risk. So it doesn't mean the end of the world if this goes further into the correction, because you mitigated your risk and everything is properly done as an account size, which is the most important in the long run. So this is not the only correction we play. It's going to be hundreds of them. So I don't know why people focus just on one point to actually judge some very flexible methodology. But if you look on the longer time frame, this saves you a lot of money.
Yep, exactly.
And the probability, if you are good in managing corrections, that you're going to overcome that with your P&L as the time goes.
Yeah. It's a good point. And I think we could sum it up and say, we obviously covered, we were short in the Qs with a hedge. We made some really nice money as a team. You know, I had the NDX on the way down. We covered it. We started to build long positions here. And what Alex is saying is, you know, I covered a short, made, I don't know, 15, 16, 18,000 bucks, you know, which is just personal money. Like, and I hedged long positions. Then we started to put longs on in here. And the point of saying that, and what Alex is saying is, we don't know for sure what the wave count is. But if the correction is going to stop, it's going to stop here. We took appropriate action. We got long exposure. And now we have good entry prices, which if this winds up going into an X, fine, because we knew that this is going to be the deciding point. It's when you have bad entries that it puts you in a position of weakness, right? You go into a trade saying, I've fully assessed the now. I've checked all the boxes. I've gone through Macro Monday. We've gone through Sector Industry Stock Wednesday. We're now in Tactical Thursday. So we have gone through the process, and we say we believe we have completely and thoroughly assessed the now to put money to work, but we don't know what the wave count is. That's fine. And if we're wrong, the risk is going to be from here down to here. The risk is clearly defined. That's trading with EQ, emotional intelligence. You know, and if it breaks higher, wonderful. We have great entry prices. If it fails and we go into X, fine. We can very calmly adjust, book some profits, get stops to break even, and then, all right, fine. As Alex just said, then fine. We're going to have to go into another Elliott wave correction. I don't want to feel like, oh, we're constantly defending Elliott, and that it's not that. It's trying to get the message out to our members that, you know, trading is not having strong conviction as to what you know what's going to happen in the future. Good trading and investing is about properly assessing the now and not wasting energy, and let your process, let everything we do, putting money to work at good junctures, decision points, pivot points in the market, let the future take care of itself. You can't control that. And it's a waste of energy to do so. So it's trading with emotional intelligence, being smart enough to know that you can't know the future, and being fine with that. That's really an important thing. And so few people have that understanding of not saying I've got the key to tomorrow's prices and here's the indicator that you're going to need to get into, the best trade for tomorrow and stuff. No, it's about the process now. It's about the mindset that we're trying to overcome those objections. All right. Sorry, Alex. I interrupted you.
Yeah, I would just add one sentence. So if you go back 2 months, we were ahead of this correction for weeks. Just go look videos 2 back months. Why? Because we had fib ratios, we had many things suggesting we might be starting, and then it started. And then we looked as a triangle. No, it's a triangle. I remember the whole process we went through.
Yep.
Okay. So what is the point in that? Elliott states very clearly, because market is psychological. So what we do with these bars, we are looking the psychological balances between the bulls and bears. If you look at it logically, corrections are just a balance between bulls and bears in the uptrend or in the downtrend. That's very clear, because bears are currently equalizing bulls, and in one moment the bears will overthrow the bulls and pick up corrections or the new downtrend. That's very clear. So Elliott actually stated the patterns. If you know them, you can navigate through them if you know them good, and then actually find your best risk reward entries. And that's what we are doing. And we have RRG with help and macro overlay. So it's very clear to me what we are doing here. And of course we are trying to explain our best, but
well said. Well said. Yeah. Yeah. And and I've said it before, and we'll get off of this soapbox right now, but I think I came out and said I want to be done with Elliott Wave publicly. I'm sick of teaching it. I'm not sick of teaching. I love it. But there's so much bad information out there that
I just get away from it.
I can't get away from it. It's the Godfather. And they pull you back in.
Yeah.
It's forever going to be a part of me. And I think maybe it was a mistake to come out and say I'm done. But it is frustrating teaching because there's so many people who just don't want to hear it. They want trading to be easy and they just want to be handed profits. You got to enjoy and love the journey. So I'm coming to terms with it. I said, I'm going in the closet with Elliott Wave. I don't want to talk about it.
I tell you, after I learned it, after you taught me the methods, I can't look at a chart. Even there doesn't need to be any symbols on the chart. I can't look at a chart the same way I used to anymore. I see the patterns that I never saw before. Right. I mean, if you never, I told you I tried to learn Elliott on my own, and and without Motive Wave, I really didn't have a good tool that helped me, and I didn't find a good teacher until I found you. But
I appreciate that.
I didn't, I mean, everybody looks and you can see the market does this, but you can't make heads or tails out of it. And this is the first thing that really did that for me. So
I appreciate that. It's and guys like Terry and Alex, I'm really I'm tough on you guys as a team. As a boss, but I'm also really proud of how we navigated this. I mean, we've pretty much been ahead of the curve all the way. There was a lot of bearishness back here. We said no, moved on up. We put hedges on when the world got bullish, and then all of a sudden everyone got very, very bearish back here in the C wave. What are you showing there?
There's the alert. You can't see it, but PXD taking profits. If you didn't close your PXD, there's the official alert.
But as I said, but I'm also very proud of how we've navigated this as a team, and we've very much been on the right side of it. And there's going to be times when we're going to be wrong for sure, but using these patterns and using the methodology that we're discussing, we've navigated this very well. I'm very proud of how we've done as a team. So good job, guys.
I will add just one more thing very lightly. I also do ascribe unpopularity of Elliott because of the educational twist. As I saw, except you and me when I tried to educate it, nobody actually gives the pretext, what's going on behind. What is the point? The point of all of this is just to read market psychology and cycles. So there is no, I mean, if you put it in that terms and explain how the trends function in a mass psychology, it's much more easier to explain Elliott than when you start and spook people by this is the fourth wave, this is the flat, this is, they get all around with these corrections without the pretext what actually these charts are showing. We're just trying to read market psychology, so that's all.
Yep, exactly
and these patterns are showing us, these numbers are just showing us the phase we think the market psychology is. So these numbers doesn't mean anything else. If people think that we put these numbers and they have some meaning beside that, they don't.
Yep, agreed.
Except just read where we are in our map. So this is just reading market psychology, that's all.
Yep, exactly right. Max asking a question, at what level would you say SMH has failed and will pull back? Yeah, so traditionally, if it's going to be an X wave, usually an X wave is just a ABC zigzag. Just something like that. And they can be multiple things. X waves can be elusive, right? So at what point would we say we're not in an X and we're going to go into another ABC? It's, when this starts to look more motive.
Can you share?
You're not sharing.
Oh, thank you. I got to figure out a way around that. So here's SMH.
That's our job.
I know. I'm
gonna be right back. I'll go get coffee.
Way overpaid to tell me to share screen. I need some virtual assistant to shock me. I need a shock collar. Just press the button. So when this is the would-be X wave and the SMH Mac, X waves traditionally are ABC zigzags where A is equal to C. When this guy starts looking motive, which is a 5-wave move instead of a 3-wave move, that starts to suggest that we may be in an uptrend. And this, for me, this looks a lot more. This for me, looks a lot more like a motive wave than a 3-wave correction. I think the low is in, and I think Alex said it as well. So, that aside, let's just do some fib. So let's just do a retracement off the highs, and we'll start to stack a zone of resistance. So we have the 618 from the high here in July and the 786. That's going to be your key zone. And then do we have a 786 on the most recent swing high? We do. And we are right there. So that's going to be a good zone. Another thing that I like to do is look at the distance of the prior B wave. And you could just do some manual fib here. Price range. No, I don't want that one. Where is it? Price range ratio right here. So what I like to do also is you just take the distance of the prior corrective wave, and you want to see where 100% is, a quality of this move. So percent distance traveled here, which is just 9.9%. You want to see the next trend wave overcome the percent distance traveled in the prior corrective wave, because that would indicate that the corrections are over. And that is going to be at 1 in 100. That's right there also. So this is the zone right here. And if you start breaking 154 in SMH, and then, I think that the downtrend line got a little skewed here. Where'd it go? Yeah, this is the key zone right here. You got downtrend resistance, you got 3 different fib levels, again, retracement from this high to this low, retracement from this high to this low, just doing a projection, and you just think about it logically, like I want the percent distance traveled in this corrected B wave to be overcome. And that would suggest that this is not another correction, right? And if we failed at like a 6-1-8 relationship of this swing to this swing, okay, we're probably in an X wave, or we're probably gonna do something. But this is a key breakout zone right here in SMH. If you go 155 bid, I think that would secure the low. But I think also, as Alex was starting to say, you can't just go buy it, because we might have to get the break, get the shakeout in wave 4, buy the pullback, and then go up to new highs.
And then even after that, then we're going to have a retracement back to that
Right.
trend line. That's going to be the the wave 2, and that's what I was saying. That whole move there, wave 1, and then wave 2 is another shakeout. If you don't have the conviction, in the market, and then after that, then it's go time. So
it's go time. But what I'm trying to encourage you guys is embrace the fractal nature. Embrace it. It doesn't, just because we have 1, 2, 3, as I just said, we're going to get 4. Don't be afraid to go 1, 2, 1, 2, and we'll deal with the 3, 4s way up here at new highs. This market is still very bearishly positioned. People are, the recession calls are starting to really peak now. People don't realize, the market rallied 5 of 7 times. We had yield curve entering normal status, leading into a recession. Stock market was higher the next year. People are just not wanting to hear that. They just want to hear recession, because, again, if it bleeds, it reads. So I wouldn't not get exposure on, guys, just because we might have to deal with this wave 4 pullback, or as Terry just said, if we have a completed 5-wave move, completing a higher 1, then pull back in 2. I think the market can just as easily do a 1, 2, 1, 2, and start dealing with the corrections from much higher levels. As I'm getting older and doing this longer, I'm respecting the ability of a market to trend much more, and just embracing the trend. So, okay. Didn't plan on going on that one, but I think that was really good stuff, guys. Any closing thoughts on that topic, or let's dive in?
no, I think we covered it good.
Okay. Hi, it's Todd from TradingAnalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section, and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at TradingAnalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.